What's going on? Welcome, everybody. Welcome. Let me know if you're tuning in. First, I see First in here. Put a one down in the chat if you're able to. I appreciate you so much for being here. If you can hear me loud and clear, would love to welcome you wherever you're from in the world. Let me know. If you've never been here before, you saw the title and somehow you found upon this live stream. My first intention for everyone on here is to give the information, give correct information. If the information that I do not know, right, I will look it up on screen and make sure that, hey, make sure to make a disclaimer that information is not verified, meaning there's a lot of stuff going on in the world right now. And I think a lot of folks are wondering, are we going up, we're going down, and we're going in between? And just want to make sure everyone is properly informed. Now, what you will differentiate from me, which I have heard, and I appreciate the love and appreciate the kind words, is that when you join my live stream or when I interact with anyone, my intention is for you to get a vibe, right? For you to feel like, ooh, this is so calming and refreshing. Right. This is like I can turn on the background. It's not some crazy. There's a reason for color psychology that I have on the screen. Do y'all see any bright reds and greens and all kind of stuff going on as if we're not traders or investors, but making sure that people are at a right psychology, mindset and mind state to receive the information. Right. So if you're here for that, you're in the right place. All right. Because you cannot focus on a skill set. Right? Not just cliche saying without the mindset, but not also without the right emotional state. A lot of folks can't receive the information that is meant for them. And if you're a spiritual person, godly person, is because they're not even in the right state to receive the information. Have you ever heard that state of mind where, man, I knew that 10 years ago. I knew that 5 years ago. Then it wasn't for you in that time. So if you're not in the right state to receive long information, if you're coming here frantic, calm yourself down, take a deep breath. All right. Cool. All right. We good to go. If you're rewatching this and re-listening to this, I know everyone can't jump on live. I appreciate you also for being here. So let's jump into the value today and answer this one question here before we share our screen is what the hell is going on? We got a ceasefire. We don't have a ceasefire. We were supposed to be in war, yet we have words that we're ending war. The market had an end of the day on Friday, if you did not see the end of the close of the market, that we were selling off continuously and aggressively because there were tweets and Truth Social posts by President Trump talking about we were going to have more boots on the ground, which sent the market even lower than expected. We were still in extreme fear, which some people say that is a buying opportunity, which it is typically. However, we can remain in extreme fear until we get a certainty of where we're going. So we're kind of playing against the odds here, just to be very frank with you and transparent, that the trading conditions that we're in, they are difficult. Okay. I don't know who's telling you they aren't or what you're watching out there, but I don't care how much experience that you have, they are difficult. But that does not mean shy away from it. That means shift, adjust, rearrange, and understand how you benefit from this market. In my community inside of Leverage University, where we live trade every single day from the first 2.5, so roughly hour and a half, 2 hours in the market. So if you're here for that and you want to join, the link is down below, and there's actually a special price right now going into Q2. All right. So we'll talk about that a little bit later. But all that being said, what do you do with that? That is why we're here. So we get prepared for this week. We have an end of the month / the end of a quarter. And is this a buying opportunity? Right? So we shall see. And I think it's really at the hands, which is unfortunate, of tweets and decisions of one human being. That's just at the state that we are. Normally, for those that are new to the market, typically you have more of a normal, predictable reaction. But with this, you have a hand in this decision that is moving back and forth trying to strong arm. And this is not even a political statement. All right. So whatever your political beliefs are, but there is a lot going on, and one person is defining the movement of the market with one tweet and one Truth Social post. All right. So we'll answer that question as we share the screen and go through our normal process. We'll spend roughly about an hour together. I'm getting these short and sweet because I think many of you are getting the frameworks at this point. So if you have any questions down below, please let me know, or any stocks you'd like to go over more specifically. If it's a long-term investment, if it's a trade, if it's a futures idea. As you've even seen, I've kind of backed off of the futures live trading even on here for right now. Does that mean I'm stopping futures trading? Does that mean I'm not going to live trade on here for those that you want to watch if you're not inside of our community? No, but just know when to kind of shift back just a little bit, let things settle, and then when to attack. All right, let's jump into it and go there. There we go. All right. So I just kind of covered this, and this is my Twitter post. If you're not following me on Twitter or X, I'm using Twitter X personally at this point, more so for the Leverage University members and anyone who wants to hear any updates about financial news and things of that nature. It's kind of just turned into that. Now, my Threads account, more of my thought leadership. So if you want to follow me on Threads, this is an extension from Instagram, an extension from Meta. Go follow me there, more so for the thought leadership piece. And you want to learn more about what I do for those who don't truly know everything. All right. So what do we got here? We've got, let's jump into our Discord here. And the first thing we always do, because I know I have new people on here sometimes, is we go over our economic calendar. So once we understand what's going on with our economic conditions, worldly conditions, just the general feeling, is we don't get too distracted or caught up in those things, because history typically repeats itself. It rhymes over time. And with that, this should be a buying opportunity. This should be a dip, right? This should be a reversal, right? So we'll talk about what that looks like when we get on the charts. So we have our construction spending delayed report on Monday. So could be interesting just because it's at 10 a.m. So if a delayed report coming from the government shutdown that we've been in Tuesday, we have PMI that should be pretty big there. Anything close to a 10 a.m. data, even if you don't know what it means and you haven't watched that video here on the channel, go watch it in your own time, which I cover the top economic reports that affect the market. Wednesday, we've got price index fuel. Yeah, maybe we see a reaction. But I do believe that Thursday is going to be pretty impactful. And then obviously Friday, which are consumer sentiment. So I would say this week is still has a lot of data that could impact the market. But as we know, the biggest data or the biggest news is going to be essentially what President Trump is going to be doing with this war. If there's going to be a back and forth, I don't really believe anything until actually you see troops leaving. Right? The promises of, hey, we're backing off, the promises of, in my opinion, this is a political play to get people to inject their money back into the markets. Just my opinion. Because if retail investors and big money think that President Trump is going to be cooling off the war, they'll stimulate the money back in the market by buying more assets continuously and saying, hey, we're ending soon, and buy it up. That's just my opinion. So do I think this is a buy opportunity or a dollar cost averaging opportunity? Yes. Any kind of 5 to 8% pullback in the market is an opportunity, because you never know, and we don't try to time the bottom. But do I think it could get worse? Yes. And if we've been seeing what's been happening in the overall market, what's been happening? We've been forming lower highs on our charts. So if we get some type of rebound week, we still have to watch out for potentially another rejection back down, right? So I'll show you what that looks like on the charts, because there's a key indicator that I talked about on a video this past week talking about the 200 daily moving average, and we got underneath that on Friday. So we'll watch that mark on tomorrow in this week. All right, so decent week here for data, but main thing is just kind of watching out for President Trump and whatnot. But a lot of these movements here on the Fed speakers could move the market in the future session on Thursday, depending on what happens overseas. All right. We're not in earnings season just yet, but earnings season is approaching again, right? So we will be getting the Q1 reports for earnings coming very soon with the financial companies. So we'll take a look at that. So just prepare that earnings season is coming back around, which could be an opportunity, as we know that a lot of these companies have had great earnings, right? But because of this season that we're in, which is typically a pullback season, then what happens, right? It creates a buying opportunity leading up into the next earnings report. So leading up to this next earnings, which is our Q2, I do think that these companies will beat again. But the biggest thing right now that's a concern is really the AI spend and how that will affect the overall profit margins and the forward guidance of these companies. Okay. So think about that in the forefront of your mind. If you're taking notes that, hey, this is an opportunity. I do not have to day trade every single day. If I find an opportunity, as we will inside of our live trading room, then cool. But I want to start thinking what happens in the summer if we recover, just like last year. What happens if these earnings are really good? And I'm like, man, I should have dollar cost average, or man, I should be preparing for longer dated call options potentially once we find a confirmed bottom. All right. So we shall see, but don't think this is the end. All right, let's go into our charts here. Let me get this up. And what questions did anyone have on fundamentals or anything to add? If you want to add anything, as always, I appreciate everyone here that contributes in some form or fashion. And then I will make it known to anyone who's watching that can't see the chat. Nothing? We good? All right, let's keep it rolling. This is the time where if you have any specific stocks that you want me to go over, please let me know. I will also pull up some of the top setups. But as we know, we want to see how the week performs and starts, because last week, maybe we thought we were going to get a bigger rebound and we just kept selling pretty aggressively. And there was really no big rebound. So what that tells us is that sellers are in or have gained full control. Because what we've been seeing is this chop action through here. And I'm on SPY, S&P 500 ETF. We can see in the after hours session right now that we are at 653. Okay, so I will mark some of the levels that we could rebound up into. So why I titled this Don't Get Fooled is because I want to make sure that, again, are we recovering? Because every little green pop has been getting shorted, right? Every little green pop. So the first thing I want everyone to do is now we can move this balance range that we were in for a while, this kind of chop, 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 chop. Now we can move this down, in my opinion, down into that daily 200. Okay. So I want you to look at what happened. And for those in the futures market as well, similar chart. So I can go over to ES and I'll do that in just a second. Okay. So this balance range, and some people may look at this, which I always like to play devil's advocate for whatever I'm looking at. Hey, Brian, like sometimes, what about this support down here? I see it, right? But again, like I mentioned last time, this situation is different than this situation because we were in a continuous uptrend and we were not underneath the daily 200 moving average, right? Which signals more of a bearish pivot. Okay. Look at this pullback. We did not even reach anywhere close. We bounced off, reclaimed moving average, moving average, moving average. Now we've gotten underneath all of these. So that's how you can differentiate a little bit different outlook versus just saying, well, isn't this support? Yes, but also look at the price action and where it is on the trend channel. All right. We have changed trend here. Okay. So now that I see that we were rejecting roughly this 660 to 662, this was support, as we can see that 660. If I draw that there, all right, 659, 660. And I have that little channel there. We can see that this green candle rejected that area. Okay. And then we tried to hold up the daily 200, but just couldn't get any buyers to step up off of it. And then we flipped it underneath that 656. So that's another midpoint that you want to watch out for going into tomorrow, is that would be the first little bitty kind of decision point, so to speak. Meaning, if we're at 653 and this daily 200 is sitting at 656, you've got to understand that as long as we're below that area, right, bears are going to try to defend. Okay. But again, well, Brian, what if we get above? What if you're too technical and analytical? What if we get above? And I'm more so speaking to trading right now. Okay. I'll get to long term once we wrap up this SPY analysis, because a lot of people are thinking, is this a buy opportunity? Should I buy some? Should I buy some? So I'll get to that in just a second. This is just trading, what we're going to look for this week to see if bulls step up or bears continue lower. All right. So this daily 200 is a very key level to watch. So Brian, what if we get back above that 656 and we overshoot? Well, where are we overshooting into? And for those on terminology, because I like to make sure everyone's understanding, overshooting means we're getting back above a level you said that we should watch out for, so should not enter some call options. Well, we're still not out of the water yet. So it's going to overshoot this daily 200, get back above. And, as always, I like to draw it out so you can visually see. You would have a candle that looks like this, and it gets back above like that. Okay. So I'm on a daily time frame right now. So what will happen is when people get down into the 5-minute time frame, right, and see something like this, and they're like, man, we're back, right? But if you zoom out, are we yet, or can we reject this area right here? We're still not out of the water. That's a pretty big area. And you have to understand that the volatility is wider. So it looks like a massive move and we're reversing. But if you zoom out to the bigger time frames, we've got a little bit more room to clear. All right. So if we see a candle like that into the start of the week and whatnot, I'm not going to be surprised. But if we come up into here and I see price action kind of getting stalled, and then I start seeing candles like that, and then red, and then we got a gap and it comes all the way back down here like that. Okay, well, I'm not even surprised by that. So that's what I want. I don't want to say beginners, but that's what people are maybe getting frustrated with, is they see the first green candle or they see the first big red candle and they think, why is this reversing? Why is this going the opposite direction? Is because that person may not be used to the volatility. So we've got to give it wider room or wider range to say, man, that's a massive green candle, but it doesn't necessarily mean we are reversing yet, right? Same thing that happened here, right? On Friday, man, look at that big spike from 654 all the way up to 661, and we're going up. No, we're not, right? And how do you differentiate that is that you zoom out a little bit and say, I don't see any bullish candle that signals a reversal yet. I don't see any bullish candle that signals a reversal yet. Well, Brian, what would signal a reversal? If we start to close a daily candle, something like that, that would personally, for trading purposes, right? That would get me interested, saying, that's a reclaim back above. It doesn't have any top wick on it. It's pretty strong. It could be some type of bullish engulfing candle. It could be pretty strong there. Maybe the next day I watch out and see how we pull back. If we start showing that we're failing to go lower and lower and lower, and then starts to reverse here, and we call this our battle zone, right? If we start sitting in this zone, 660, 660, 660, well then cool. Like we could start reversing. But the first move is typically not the move. A lot of times the first move has been the trap, right? So even on a daily or a 4-hour time frame, this first move, bam. So the next day someone starts looking for calls. That's just the signal. Okay? Because what people are looking for, and most traders are momentum and continuation traders. It's not natural for most traders to scalp, right? That's not natural. So the scalpers are doing fine. Like, hey, I'm in and out. Hey, I caught 20%. Hey, I'm out. And the continuation traders are like, my gosh, like I held this call all day, and then I look back, I went to work, and then my call option is down, right? That's a continuation trader. That's a day trader that's thinking that one direction is going to continue all day or the next day. We could be bullish today, bearish tomorrow, bullish, and then continuously bearish, and then back bullish, and then back bearish, and then back It's just back and forth, right? So if you understand those conditions, then you understand that what I'm looking for are the traps. So what I'm doing and my community is doing inside of our live trading room is that what we're doing is making sure that we are paying attention to the signal candles. So if I see a big move down, I don't want to chase that big move down. I want to see where it goes back up. And then that's where I enter either my call or my put. Kind of like I was telling Sherry on Friday, I still think Apple has lower, but it doesn't mean that Sherry's call option that she took was wrong. That's just the market we're in, right? So I traded a put on Friday with Apple, caught roughly 30 to 40% on it or so. I think I had to look back and see it from our wins channel, but she, just for reference, and this was just to let everybody know, Sherry, like that's the psychology that's going on, right? Someone's in a put and you could be in a call option, or someone's in a buy for futures and another person's in a sell. And you're like, that makes no sense. I'm seeing something else. That's the market that we're in. You can trade both sides, scalping up and down, back and forth, right? Whatever fits your eye, but just understand that we haven't had a true reversal signal yet. So people are starting to get interested in call options, which I don't blame people right now. We're doing it in the community, right? I'm doing it personally. I'm like, man, give me a signal so I can get the call options going back again, right? But it's hard to continue because next thing you get a tweet and we're right back down. Can I get a 2 in the chat, right? Does that make sense for most individuals understanding where I'm coming from? 2 in the chat if y'all can hear me, if y'all are able to. Just give me confirmation. So as always, I like to give the big psychological piece of SPY, just so you know, price action. So when you step into the market during the week, you kind of have this aura of what to expect and you're reacting on that. Okay, big green candle, I might be expecting that. If he says anything positive, okay, I want to get ready for a signal to go higher. But also, I don't want to be faked out by the first big green candle that's going up, right? So, cool. All right. Chris, what's going on, man? How are you? I appreciate y'all being here. All right. So that is the trading insight. Okay. So we've got our levels here. We've got our daily 200 marked out 656. We also have our battle zone of rejection. And maybe I'll move it down to the top of that daily candle there just to get a little bit more precise, which would be at 661. Okay. So right in that little battle zone there, I'd still want to be mindful if it's entering into there, you could trade it up for calls into that area, but downtrend, it needs to get back above really that 663 in my opinion and close the day above 663. Okay. Otherwise, it's going to be looking like this: pop, fade, right? So I don't have to beat around the bush for many of my folks that have been here for a while. Let's jump on the weekly and take a look at that as well. If we look at the weekly, I do want to mark this weekly 50 MA here, which is right there, which is at 640. So that 640 is a level that if y'all been watching me for a while, if you've been listening, it's like he did say something about 640 that was coming in. Well, here we are. So this is another line of defense that we want to watch for into 640 is, do we hold that and we get some type of relief bounce? So if you're trading put to the downside or you're trading sells in the futures market, that's probably where we're trying to get to. So if we're at 653 or 660 and we still have war that's not ceased yet, 640 could be that target point. And then again, just like we did here in this area, we tried to see what we're going to do and broke through. This is the next battle zone at 640. I want you to look back here what happened in this area last time at the weekly 50 right here. All right. We came into it and we chopped around, kind of overshot it a little bit, chopped around, and then we entered April and continued. Okay. So we're doing the same thing here, which I'll give you a visual, kind of like we did last week. We get in here, we could do this. Right? It could continue if this is a whole lie that the war is not ceasing. And we've been talking about this for how long? 5-6 months. I've been preparing folks. Hey, I don't like anything up here anymore. We need to pull back. I don't like anything up in here anymore. I don't like it. My community is thinking I'm crazy. Like, why is he trading puts? Why is he thinking that we're going to get bearish? Because I've seen it before. Multiple times over, not just last year. And then the structure of the candle and the chart does not warrant the market to go straight up in a straight line like that. That is a V bottom bounce. That's what we call that. It comes down into a low, get an engulfing candle right there, and just V bottoms and grinds, right? Bam, never really pulls back, just grinds up, grinds up, grinds up, grinds up, grinds up, pretty much all 2025. So for 8 months roughly. So we're warranted to get some volatility to roll back down. Right? Happens all the time. Look at this. Here's another V bottom. I want you to look on the charts right here into 2020. We got an extreme V bottom, and then we grinded. Bam, grind, 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 all 2021, 2022, or excuse me, 2021, and then we entered a bear market, 2022, and a midterm year. Pop, grind, 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 pull back. Very similar. So that's what gives me my thesis to say that this could get worse, right? And this might be a temporary bottom. Now, let me back up that thesis a little bit more to say, where would a correction actually be, as we always do? That's where everyone is saying, where's the bottom? Where's the bottom? Where's a correction? Measure it. The definition of a correction is 10% from the most recent highs. So if I measure this from the top, just using this tool here, and come down, right? If that's the most recent high and we've got 10%, 10% is down into 630. So we got roughly, what is that? 20 more points on SPY, right? So that's how you can get comfortable with saying this could get a lot worse. That's how I would back it up if I was on, in a Starbucks or a coffee shop and says, where do you think this market's going? I think it's got lower, but I can back it up with multiple theses to say this is a midpoint, but we're not yet in a correction. This is just a pullback. So it looks drastic, right? But we're only 3 to 4% off the highs, right? So that's why the technicals, why I come on here and talk about the technicals so much, because it can, well, actually, let me see, we're 7%. So we're very close. 7%, 8%, 10. Yeah. I mean, we're very close to that 10. It doesn't have to get to that 10 either. That's the point. It doesn't have to get to 10. All right. Now, bear market territory, 20% plus. Some people may consider it, obviously, definitional wise, 25% or more, but roughly 20% or more bear market territory. So I just kind of put a little range there, 20 to 25%, right? And that's what we entered into last time. Most recent highs here, down to those lows, that was 21%. Okay. So we would have to get all the way down underneath 600. That's 20%. I mean, you're talking about giving up the whole 2025 move. Pretty much. That's what you're talking about. And if we're technical here, y'all see it on my charts right there. You see those gaps? Not even warranted to be, that's not even uncommon. Right? So that's what gives me confidence yet again to see these weeks that could pop higher, but ultimately, where is the ultimate target? So we could pop all the way back up into 670 and recover. It's like, dang, 670. We're still underneath all those moving averages. That would be pretty massive, right? Short squeeze. But then what does that potentially set up for my pattern traders? If you're a pattern trader, and these are all statistical things that could fail, but is that a head and shoulders? You see all these theses? Is that the right word? Yeah. Let me use my educational degrees. All right. So I've got about 4 to 5 different ways that I'm looking for it to get to my level that I think personally it can get to, which is lower, right? But in the intermediate time, I can decide to dollar cost average. I can decide to trade it back to the upside for the bounce, or I could just say, hey, live trade room. Hey, everybody here on YouTube. I'm just going to wait until I get higher to reject it again. Right? If I can't, if it's not going to give me an opportunity and it just keeps grinding and grinding and grinding, then I'm going to wait for the lower correctional move, V bottom bounce into the summer, right? Or it gives me a bounce before then and I reject it leading into the summer, right? So there is some tax harvesting as well. I know I'm spending a lot of time on SPY, but this is the biggest thing that I get asked, and you probably get asked in your family. You're probably concerned about, how do I plan for this? This will give you a thesis for everything around you. What's going to happen with Meta? Well, if SPY goes down further, what do you think is going to happen to Meta? Where do you think Microsoft is going? If SPY or QQQ go down further, what do you think is going to happen to Microsoft? Right? So these give you the thesis to say, hey, if I want to buy an individual tech company, it's a great opportunity for long term. But if the SPY and the QQQ haven't even fully corrected to maybe where they could, then I may want to be prepared for another level. Just my opinion. All right. Not financial advice. You got to say this on these public streets. It's crazy. All right. Cool. Let's keep it rolling. Okay. QQQ. We got our daily levels here, so I'm going to mark that. And in the after hours, we're sitting close to that 590. Okay, daily 200. Mark that. And then I'm going to mark my weekly as well. Weekly 50. There. Okay. Weekly 50, 573. Daily 200, 590, 592. So trade within this range for now. And this is your first dollar cost averaging zone if you're a long-term investor and you always like buying the indices all the time. I think this is your first potential deposit or your first potential turn on the cash deployment. Okay. All right. As you see, I've got this bigger liquidity zone down here into our next weekly moving average, which will be all the way back down to our February 2025 highs, which we really never retested. If you're a visual person, this is how it would look. And that would also be potentially on this trend line here, right, where it would retest those previous highs. Now, a bigger trend line would be pretty much giving, like I said, on SPY, the whole move of 2025 back. Now, we didn't do this on SPY, but let's use our Fibonacci retracement. And every time I mention this, it's so funny. I'll be teaching in the streets of, Vegas and whatnot. And funny enough, if you're on here, shout out to God dang it, what's his name? God dang it, what's his name? Shout out to Nico, a different Nico. Got recognized in the Durango Hotel here in Vegas. He was like, I know you. I watch your YouTube videos. I'm like, oh, Lord. So that was pretty cool. But when I'm teaching in the beginners or whatnot, here's another tool we can use. We can use our Fibonacci retracement. There's 100% retracement right there, back down to the last March, April bear market territory. If we use the 50% retracement, where does that fall into? Right into 520, right? The 38.2 is typically where also buyers. So we're kind of in that, little golden pocket zone. So as you can see right here, could be a buyer's paradise to start trying to hold this thing up. Now, the 61.8% retracement would be, in my opinion, the chef's kiss sweet spot for a pullback. And that would be looking like this. And that would pull back into that 500 to 592 level. Now, I don't know how we get there. I don't know if we'll get there, but that would be the ideal look to say, hey, remember that person that reached out? Remember everyone asking all the time, when's the time? When's the time? Now's the time. All right. So that's a if and when. Okay. Alrighty, let's go into everybody good on QQQ. So we've got our levels here. You can already see that it's pretty bearish. The level that we want to watch this week, if we reclaim and get back above, would be that 592 level. Let me put it back on the daily, 592. Or if we overshoot it a little bit and reclaim and get back above, we want to watch into that moving average there, stack, and if we do something like that. All right. So trade it either way. If we reclaim 592, 600 will be our target. I think we have some gaps up to the upside, but still watch these moving average stacks back up into, so you could trade some calls back up into, but ultimately any green pops right there, ultimately would probably get shorted to go lower, something like this. Okay. Now, if you're not one of those people that like to, trade against the trend, maybe you're not a reversal trader. If you see green, you're trading up. If you see red, you're trading down. Okay. If you see a break below the previous day low and the previous week low, okay, watch out for that to continue. Okay. So a simple trade would be below 578 on Qs, down into 573, underneath 573. If you got them marked on your charts, that's the weekly 50. And then we're just going to be starting to flush even more down into that 560 level, and then that 38.2%, 550. Okay. Let me check the chat, make sure everyone's good. I think everyone's cool. Everyone's understanding. All right, let's jump into IWM. Okay. And anyone who is rewatching this, if you come back to this video and you're like, Brian, none of the stuff happened that you said would happen, understand that I am in my trading room. I'm actively updated in the market every single day this week. So things could change, and I'll post a YouTube video about it, which is why I like to have a bullish and a potential bearish continuation idea. All right. So we're moving and grooving with whatever's going on politically. Okay. I start from the weekly here. I'll mark my weekly 50 moving average there, which would be down into 230, which is what we talked about in our live trading room, and I think here on the YouTube channel as well. Okay. Weekly 50. Okay. And then we've got 240 that's kind of holding up as a support. As always, look at the daily. Okay. IWM is holding up the daily. It's a little bit tricky here, but I would just watch the previous day high and kind of see if that stays below it or it reclaims it, which would be right around that 247 to 250 area. All right. IWM is holding up this daily 200. It did not break that daily 200. So again, pops, fades for puts on IWM. If you trade futures or RTY, pops, fades on that for sells. If you break below that 240, you can get some continuation down in the 230, 232. All right. I'll briefly run through these. If there's any specific stocks, I'm going to jump through our core stocks. If there's any stocks that you're like, hey, I'm looking at this setup, now's the time, because we're wrapping up here in the next 15 minutes or so. All right. I want to keep these at an hour. Okay. Good to go. All right. Let's just go through our core here at the top. I got Amazon. Okay. Look at weekly Amazon. And to me, again, this is what gives me a little bit more conviction potentially that the SPY and QQQ and the overall market can go down, is because a lot of these individual core companies that are moving those specific indices, a lot of our obviously tech companies, the structure on them looks pretty bearish in my opinion, right? This looks like a bear flag, right? Amazon, everyone thought it was going back up, but it can't go up without the market, ideally. And it looks like a bear flag there underneath a weekly moving average. So that would be underneath that 210 level, right? It was 212. I think last week gave us a nice rejection area of 212. Now I think it's more so 210. All right. So just watch 210 on Amazon to see if it stays underneath that 210. As long as it does, we can continue down into that nice equilibrium of 200. We break 200, then this starts formulating into a true bear flag, and we continue down lower like that. Okay. So Amazon looks more bear flaggish to me, at least for the short term. Does that mean don't pick up some shares? No, but trading it, I'd be very mindful of just understanding what that formation, if it starts reclaiming, taking out, back 220, above 220, I think that's where you can get a little bit more bullish, but your pivot is right around 212, 215. That's why I have that red line there. I keep changing it, right? It'll be green sometimes when it reclaimed it with that candle close, and then it fell back underneath it, turned it back red. Okay. All right. Google is just, my gosh, resilient, but it can't be too resilient for too much longer. but it needs a bigger pullback. And I think the market needs to help it. But Google, I mean, you could look at this as a head and shoulders situation here, and then it rolls over and starts looking like that, right? Look at all those gaps it needs to kind of, close, in my opinion, if we do get a true correction. But Google, line in the sand, I would say 295. It needs to get out of this situation here. If it, I'm, if this turns into an inverse head and shoulders, left head there, and then does something like this, I'd be a little shocked, but it just can't. It's been too resilient right now. So I'm just waiting for Google. I want to get back trading it because Google was one of my top performers in 2025 for trading. And it's been just trading like absolute nonsense in this range. So I'm just waiting for it to get back out of that for right now. Apple's been kind of it's gotten replaced by Google. I mean, Apple's been trading pretty nicely. Nice volatility up and down, kind of getting out of these chop ranges, fluid, very nice. So Apple is in a downtrend, at least for right now. So I'll be very mindful that if you look left, right, and that 255 is kind of acting as that resistance for now. Okay. You can kind of look at this there as being overhead supply / resistance, and look left here. And last time Apple got underneath that 255 and ultimately underneath 250, it did retrace back all the way into the 220s, but Apple could stop wherever it wants to. It's been truly resilient, one of the strongest stocks over the last year and a half. So Apple, as you can see, very steady here. A lot of folks really like Apple, just dollar cost averaging. It's not as volatile, obviously, as a lot of other tech stocks. You can just look on them monthly and see Apple's been very, very steady here. So I wouldn't expect Apple to tank, like Microsoft has done, and the volatility of others like Meta. So I'm kind of more so looking at Apple as, as it approaches these supports, getting really comfortable with maybe where SPY and QQQ are, and looking at Apple as having a little bit more of a stronger recovery. Quicker than some of the other tech stocks. So Apple, trade it to the downside until proven otherwise. But Apple, in my opinion, has been one of the stronger ones. So as it pulls back, it could be one of the first to kind of really, really recover, as it's been very strong going into its earnings. Okay. Speaking of earnings, let's just check when the earnings typically come out. I don't have the report up here. So Apple last year, 2025, it was in their Q1 was in the beginning of May. All right. So if we have a bigger pullback in April, tax harvesting, so on and so forth, people, write off a lot of profits and gains and things of that nature, and they start taking some profits going into tax season, redistributing, very similar to the end of the year, then we could have a bigger pullback. Microsoft just not getting a bid at all. I mean, the weekly chart here is just, the price action is just telling me very, very bearish on Microsoft. So if someone asks me, which as people are probably asking y'all, is now a good time to buy Microsoft? Yeah, it's always a good time. But is this price action telling you that you found a bottom? No, there's no hammer candle on a monthly or a weekly. It's actually an inverted hammer shooter candle here. Right? Shooting star candle on a monthly time frame. If I look at the year of 2026, does that look like a very strong candle to you? Right? So need to really understand, looking backwards, that there's no defined bottom yet on Microsoft, but does not mean don't dollar cost average on a top company. Right? So Microsoft is still weak for right now. Right? So I want to see how we react at this 370. And I think we call. I don't like to say that. I don't like to, say, yeah, I called it or whatnot, but I did warn or told people that I think Microsoft can come down into these 350s, right? As it was up here, because we had a double top. Everyone's trapped. Everyone loaded up the boat here on Microsoft, and then it went lower, right? So again, try to find, if you're a long-term investor, what I like to do and help me with the charts is, number one, look at where price action is doing on higher time frames. Number two, is it ahead of the market? So if Microsoft is pulling back before SPY and QQQ even correct, then it's going to only accelerate as they begin to pull back, right? So that gave me a little bit more promise to say that Microsoft had not reached its true bottom. And if you look, Microsoft has given back pretty much everything from the bounce of April of last year, right? That's not scary over the long term, but if anyone started their investing journey and bought Microsoft at 350 and didn't sell it, they're like, man, it's back to my average cost, right? So just understanding the volatility of tech stocks, understanding the type of market that we're in. All right. Meta. I'm just going to be watching that 380. 580. I'm sorry. 580. And again, if you see some big bounce this week and you're like, Brian, I think this is the bottom. I already have that in the back of my mind. I already have that in the back of my head that if I see the price action that tells me that this week is going to close extremely bullish, then we can go into April with a different mindset. But if we get continued weakness price action through this week, last week of March, technically, then we're going lower probably in April as well. Okay. NVIDIA. Just going to be looking for pops and fades at the daily 200. So if NVIDIA pops up anywhere into that 177, 178 area up in here, and I see resistance there, that'd be ideal to roll it back down into the mid 160s, which is what we've been talking about. If y'all remember me talking about it, I said that NVIDIA, where's the best buy opportunity for NVIDIA? Probably 150. All right, we talked about that probably 2, 3, 4 months ago, continuously. So first pit stop, 169, 170. If we start getting underneath that 168, then we can go lower. But no bullish price action here with a firm weekly lower high right there, and now right here. Okay, with pretty bearish candles there. You can see that bear flag, pretty clean there. Okay. So watch where the support is. I wouldn't trade puts into these supports, but if we pop, fade it, that's probably the target that it's going down into 167, 165, at least for the short term. Okay. But reclaims, in my opinion, are probably one of the hardest ones because it could V bottom. So if NVIDIA V bottoms off these lows, just see a straight up candle like that immediately, and then we see a grind. Those are the hardest to catch, right? Because it's technically already gone. It's already back up into the area that you were trying to get the calls back up to. So that's tough to trade. But if we do get that, don't trade against that trend. NVIDIA is going back up into that 180, 181 area and see what it does there. Do we pull back, hold that? Then we can go lower, up even more. Okay. And they'll be right back into that chop channel. All right. AMD. The pivot point, AMD's been kind of ugly here. I'm not going to lie. It's been kind of ugly in this range right here. I think AMD is still a great buy long-term anywhere underneath $200. So, if people are just dollar cost averaging or people are long dated calls, I think most individuals want AMD to fill this gap and get back down there, right? And give a pretty clean upward trajectory. So it's trying to make a decision. You can trade AMD. It's just not really getting a continuation one way or the other. If you're catching it, there's your support. There's your resistance. 203. Now, I would say this daily 20 is very interesting. So if AMD, it has been getting some extreme buy pops off of these areas. So I'd lean more towards a little bit more bullish with AMD if it does get, moving and grooving above that 206, 207 area. And we start seeing some rotation back to the upside like that. So it could go either way on AMD. Check the chat. Anybody? I'm going to short any pops. Too bad quad witching calls got me. Yeah. Yep. Thinking the same thing. I was also thinking Head and Shoulders on SPY. Yeah, we're all on the same page, everybody. I'm glad. We're all on the same page. It's kind of just keeping that forefront. And for anyone who doesn't know or is just not getting it or it's a lot of information, any green pop I see, any big green candle, I'm trying to short it with puts until that does not work anymore. Does that mean you don't trade calls? Well, Brian, can I catch the calls up? Yeah, you can do whatever you want. Right? But that's the thesis. That's the trading idea. Any green big pops and like we're back. No, we're not yet. Okay. I'm trying to short those pops. Everybody good there? If you just needed one summary, I'm out. That's my trading idea right now. Right. And then long-term investing for anybody, turn on your dollar cost averaging cash deployment. If that is your strategy and you have a lot of cash to deploy, you can start turning it on slowly. Okay. Not financial advice. Palantir here. Haven't really been liking the price action. So I've just been kind of waiting on Palantir because one of two things. Palantir is going to go down with the market and this becomes a big bear flag right here and it gives back the whole move and we pull back like that. Right. I think, 10 Veer has been thinking that like, yeah, keep shorting Palantir. Right. But there's a lot of individuals that think Palantir is back, right? Because of the war. But I'm looking at price action. I'm like, it's still technically a lower high. I mean, is it really back? It's still technically underneath these moving averages. Is it really back? So it is difficult to go against the grain when everybody's like, pick up Palantir, it's back, it's going to shoot to the moon. I'm like, I'll just keep my opinions to myself and my community. Okay. So you don't know until we react right in here, but Palantir's just been sitting in this chop zone. It could be a bullish consolidation. Yes, I do get that. If we continue with war, so on and so forth, and Palantir benefits, yes, that could happen. And then everyone will come out and say, yes, I told you so, blah, blah, blah. Right. But a true trader or investor is prepared for either way. We're reactive. We're not in the prediction business. Okay. But the more you see the market, you start to understand that what it's really showing you behind the scenes based off the price action, the structure, and the location of where price is, right? We good? Now, an awesome trade that we took on Friday. Just want to shout out the community here and show everybody what we put there. Now, if you took this, I know some of my community members missed it. I caught a little piece of this trade. But Dell popped extreme on news from the SMCI scandal that's going on. Posted this here in the community in our Trade Ideas channel. Gave an idea. We talked about it all Friday and just tried to scalp it. I was impatient. I didn't like what SPY was doing, but I see this gap fill here on Dell, and James caught that as well. So keep your eye on Dell. I would say that Dell looks like a triple top. It popped on news. And you could look at that as potential short opportunity. Look at that price action there. Gave up the whole move. Any pops on Dell could retrace all the way back down through those gaps, back down to 120. Could be a really lucrative trade there. There is your free game for the evening. All right. AVGO still weak here. There. QCOM still weak. All semiconductors. If I look at SMH now going in the semiconductor sector, SMH still rolling over lower highs. If SMH breaks below that 378, 380, and we start moving down, watch out below for a lot of the semiconductors. Everything just looks very bearish to me. I just think a lot of questions are on Oracle. Is this a good time to buy Oracle? Yes, but if the market, think about it again. If the market goes down, what's going to happen to your top stocks? They're going to go down with it. Okay. So Oracle, I'm really interested in. But Oracle, I would like down closer to the lower 100s. Okay. The lower 100s, I still think this is a little bit more bear flag action here. I like Oracle looking more like that and being more interesting. Okay. Something like that. Now, I know that's a little scary because you're pulling back to what 2021 highs of Oracle. I think that would be ideal. Very similar to kind of how HIMS did. Right, HIMS gave back majority of the move back down to 2023 highs, back into $15, and it gave an opportunity that was a decent risk to reward. I think still Oracle with the market still on edge, it could bounce from here just like it did last time on this trend line. But ultimately, if the market continues to go lower in a midterm year, I think a better risk to reward would be down closer to $100 on Oracle. So do as you please there. Do you believe Oracle is a solid company? Do you believe it will be above $149 in the future? Then do your due diligence and buy, right? You don't have to time the bottom, but I do think there might be a little bit lower on Oracle. Okay. Scan through some of these. Another really good setup here. Watch out for Uber. I still think Uber and Lyft. I think a lot of people invested. I said to be careful on Lyft. If you remember, that's why I haven't been mentioning it as far as our community and whatnot, because there's still a lot of uncertainty around. It doesn't mean Lyft and Uber aren't solid companies, but if this autonomous vehicle situation comes out with Tesla, which is already in production, we already knew the news of Elon completely nixing the Model X and the Model S, right, for the future to make room for these autonomous vehicles to be produced in those factories. So if that's the case, if he is removing two solid vehicles that people love, and they're the highest priced vehicles, and then using all those resources to put into autonomous Model Ys, or the new formation, I think is a blend between the 3 and the S, the 3 and the Y. But if he produces all those things, what does that do for an Uber and a Lyft? So that's why you can see a solid company, in my opinion, like an Uber and a Lyft, that are still very useful, still getting very bearish action. So if we know that fundamental analysis, then we can look at Uber and Lyft and say, that looks pretty bearish, unless some news comes out and they say something like Apple did and said, we're no longer producing that, we're going to just reintroduce it. Then Uber just goes to the moon, right? But as long as Tesla is in the game, as long as Elon is preparing for these things, he hadn't been talking a lot. He's been focused on this autonomous vehicles and AI production and autonomy, saying that in the future, no one will be driving any cars, right? So if that's the case, I see Uber going out into the 60s, the 58s, which looks very bear flaggish. So I would keep an eye on Uber for put options, potentially for a trade idea. Okay. Lyft, just don't see any lift on it right now. Okay. Maybe $10. This looks like bearish consolidation right now to me. Looks like bearish consolidation on a weekly time frame. It is underneath the weekly 100. All right. So it's going to need a uplift or some type of acquisition or something. Now I could see it'll be very interesting if this autonomous, here's my theory on AI, which I haven't been talking about a lot, which for those who know, we've created a whole separate entity for that. So I'll get into my thought leadership about my opinions on business and AI and all those things. But I'm wrapping up here for everybody. If y'all have any questions, please let me know. But here's my theory. If anyone wanted to know, it's like, man, am I the only one thinking this way? If this is the future, and AI obviously is only as beginning stages, and if Lyft and Uber are still solid companies, profitable, relevant, what does it look like for an Uber to get acquired by an Apple? Like, what does it look like for a Lyft to get acquired by Uber and there's only one, and then Uber partners with Apple or partners with another company, right? And Tesla's running these autonomous vehicles that now is overtaking Uber. And now, here in Vegas, we've got Zooks and all these other things that are throwing out so many ads of pretty much saying like, hey, I can listen to music in here. I can party it up. It's like my own private party bus. I don't have to have anybody in here with me. I don't have to deal with a driver. And that, I'm not gonna lie, I need to test out the Zooks here. And I know some of y'all are testing out Waymo, and I think some people are just not like, for my analog people, Megan, for my people that are very stand firm in human beings being at the forefront, we've got to also be open as human beings to say that what does the future look like, and we can't be scared of that. So if that is being marketed more and more and more and more, it's very similar to the iPhone. It's very similar to how a lot of us were born and raised. Even though y'all think I'm younger than I am, I did grow up in an analog era where if you would have told me growing up that we would be operating off these devices and like I would be able to just FaceTime and do all these things off one device, and like it's the same thing. So human nature evolves with technology, right? Especially with these gas prices and oil price. I mean, what the heck? Like, so it wasn't too long ago that people were like, man, that's Tesla. Ain't nobody buying no electric vehicle. Right. So it's going to be very interesting for the quality of life and the inflation rate and how people will be living. And if they're working from home anymore, saying, man, I don't even drive that much and I can just charge my car at home. And like, maybe it's a hybrid. So I do like having gas, and it's just a whole different way of living. Right. So we have to start thinking, if you are behind on saying, man, that's never going to happen. You cannot think that way, or you will be a Blockbuster, right? You will be a Toys R Us. You cannot think that some of these companies are not going to potentially be a footprint in the bigger arching theme of what are going to be the companies that are going to be here for a lifetime, to say, why isn't Uber and why isn't Lyft going up? They were the starters. They were the implementers. But you still have people that say they can rule the world and run the world, and say, we got the blueprint. We'll just do that. It's crazy, right? It's crazy. iRobot is now coming to life. Bitcoin at 68,000. I'm thinking of coin and MSTR puts. Yep. Palantir is a wartime trade. If it breaks 162, then boom, 180, 190. Yep. Upside on Palantir if that happens. Yeah, we're all on the same page. We're all on the same page. Any final thoughts from anybody? I'll go over those really quick because Tanvir mentioned them. Bitcoin now formulating more of that true bear flag structure here, right? That bear flag structure underneath that 70,000. Okay. So the game plan is coming to fruition. For those of you that are new to me this year, the past like 5, 6, 7 months, this is the game plan I've been talking about for 5, 6, 7 months, where you sit back, you scalp, you day trade a little bit, but this is the pullback, or this is the pain that people have been waiting on for probably 3 years. 2021, bull market. 2023, bull market. 2024, bull market. 2025, bull market. 3 years of just continuous upside, which has been great. And people have been praying for, saying, please give me a 2022. Please give me a 2018 something. There's just something, right? Where I get a continuous downside so I can actually prepare to pick up the dip, right? At a very lucrative price. Okay. So now you can see on a bigger time frame, on a monthly, this Bitcoin here really rejecting and formulating that monthly candle, which looks like a continuous bearish candle, right? So if we get a new low at the end of March underneath 60,000 and war continues, and people no longer see Bitcoin as that safe haven, like pour all your money into Bitcoin, well, it doesn't really matter if there's still war and uncertainty and inflation and a new Fed coming in, all that kind of stuff, right? So that's just formulating right to our plan that Bitcoin could get down to mid 50s. And then I'm going to revert back and not say I told you so. But if Bitcoin gets down back into 38,000, I'll be like, we posted that video in December of 2025. 38,000, we're here, right? So I love y'all. I appreciate everybody. So yes, puts until otherwise. Any pops, we're looking at fading it. If you want to stay out of the market, I definitely understand. I think this is a great time to learn. So with that, I will leave everyone be. Okay, leave everyone be. If you want to join Leverage University or you need more one-on-one support, please click the link down below. Right now, I do have discounted the monthly membership for those that are new. All right. For those of y'all already in, you're already making money. Okay. So I do want to welcome new people in for Q3. So if you've been on the edge, it is discounted 33%. Alignment there, 33%. It's $100 a month. You can come in, check us out, and yeah, we'd love to have you. All right. Any questions about anything? Pamela, thank you so much. I appreciate you. And I know people are always reserved about memberships and this and that and this and that. It's really just to let people know how we do things and answer questions a little bit more real time. So if you're that type of person that's like, hey, I don't need memberships, that's why we do these free videos. But if you're a person that wants more real time, be able to ask questions, don't have to wait for a YouTube video, that's where it benefits. I do a masterclass every Thursday as well in the evening time. So it's not just live trading, it's also being able to speak to the thought leader. It's not another person trading, it's not another person teaching, it is me. So it's all kind of questions that come up in this space. It's wild, right? Cool. All right. Peace, love, and blessings to you all. You have a great week. I'll talk to y'all soon. Y'all be blessed. I'll see y'all in live trading tomorrow morning. First